Prediction markets give people the power to bet on anything, from what's going to happen to the economy to who's going to win the Champions League. The most common form of a prediction market is a binary option market, which gives the users two choices to bet on the outcome. The probability of either event happening is displayed from 0 to 100%, and the payout is adjusted based on the crowdsourced probability odds. Prediction markets can be thought of as belonging to a more general concept of crowdsourcing information for unknown future outcomes. Learn more about Polymarket and Kalshi, the world's leading prediction markets, in today's episode of Whitepaper, where we're strictly educational entertainment and not financial advice. So the two largest prediction markets in the world right now are Kalshi and Polymarket. Both of them serve the same function of creating prediction markets for users, and at the moment, they're both valued at over $10 billion. Now, what's the difference between the two of them is essentially Kalshi operates as a legal regulated entity, something which they've claimed since 2024, while Polymarket operates offshore. Now, here's the thing. Prediction markets, although may sound like it, aren't considered gambling. And the reason is because in a prediction market, you're not betting against the house. You're betting against another user of the prediction market. On Kalshi and Polymarket, you can buy and sell shares representing a future outcome. Stuff like, will the latest Wicked movie be in Oscar nominations for Best Picture this year? Or is Bitcoin going below 80K by end of the year? So these shares are created when opposing sides come to an agreement on the odds. And the shares are always priced between $0 to $1. And every pair of event outcomes is fully collateralized by $1. At the end of the event, the final outcomes are paid out at $1 for each share. So for example, if you bought in at say 25 cents and your predictive outcome won, you'll essentially receive 75 cents back. Since these are shares, they can also be sold before the event outcome is known, and that is a way for you to either lock in profits or also cut losses in case you decide to change your mind. Recently, Kalshi raised over $1 billion to bring its valuation up to $11 billion. Polymarket, its offshore crypto counterpart, is also raising, and they've been raising since November with a valuation of between $12 to $15 billion. They are still raising and have not closed their round so far, which at these valuations really tells you that the demand for prediction markets are peaking and people really like to be incentivized for being smart. If you're right, you win money, and if you're wrong, but not right, you get to cut losses and still feel right based on the new information that you get. On a deeper level, however, prediction markets aggregate information through financial incentives, which encourages research, honesty, and quick incorporation of new data, such as news events or scandals that happen in real time. These odds on the markets often contrast with polls and experts because there is an incentive for users to be right. And when the volume on these markets are high, something like, let's say, $7 million worth of shares, they typically become more accurate as a source of real-time probabilities. The accuracy in crowdsourced knowledge, or wisdom of the crowds, makes it a pretty interesting source, and some have also likened it as a way to assess and collect data in 2025, especially with AI agents. So let's talk about the owners of these prediction market behemoths. We have Tariq Mansour of Kalshi and Shane Copeland of Polymarket. Both of these founders are fully doxed. They are very public and very vocal on the potential of prediction markets as a source for human advancements and making knowledge productive for you through financial incentives. The media likes to compare these two as rivals in the space. Obviously, they like to favor Kalshi because they are regulated, and Polymarket is essentially the on-chain, shady crypto version, which no one really likes to talk about during Christmas dinners. But reality paints a different picture for this duopoly. Kalshi owns compliant US fiat access, while Polymarket owns global crypto scale. On an operational point of view, Kalshi operates with fiat binary contracts and they receive a 50-cent revenue from trading fees, whereas Polymarket also uses binary contracts but back the shares with USDC with a P2P order book. They take a 0.5% revenue, take a fee, and rewards. Now, annualized, Kalshi is reportedly at $700 million in revenue, whereas Polymarket is at $160 million. In 2025, Kalshi has done approximately $17 billion in annual volume versus Polymarket, who has done $21 billion, which translates to an average volume of $330 million and $410 million per week, respectively. Users, Kalshi doesn't disclose its total unique users. However, the estimates for its DAU or daily active users are at 33,000, with the peak DAU at 400,000. And obviously, this is during really big global events or really big events like political elections. Polymarket, on the other hand, reports over 1.3 unique users with an estimated 45K DAU. And the peak weekly average user count is currently at 470K for the months of October and November. Kalshi is often the go-to brand name for sports betting markets, while Polymarket, because of its crypto affiliation, has a stronger niche in crypto markets and other niche markets like elections. So ever since Kalshi secured CFTC approval and regulation, they have seen explosive growth in the industry, providing access to not only the US market, but to also 140 new countries. Polymarket has also benefited from this with a re-entry into the US market following the lax regulation and is planning a native token launch in 2026. So Kalshi dominates lower in the fees, but the scale potential for Polymarket is just so much higher due to its censorship resistance infrastructure. So how has the market reacted? The global attention on prediction markets has sparked conversations on the wisdom of the crowds phenomenon, suggesting that aggregating knowledge will outperform all individual forecasters. Marketers have responded by turning prediction markets into live streaming content, betting live with their communities. Developers, on the other hand, are generating AI bots to essentially bet on the user's behalf. And so far, what I've seen, the highest has been about 70% on the win rate so far. Arbitrages, not too far behind as well, as they have reportedly extracted around $40 million between Kalshi and Polymarket inefficiencies. So while business and financial markets are essentially finding new ways to profit off prediction markets, academics and media are essentially saying that prediction markets are at the core really about information, and it's creating new forecasting infrastructure because everything on the markets are in real time and the chances for manipulation is just that much lower. So for some final thoughts, as the sector continues to mature, it's looking like it's going to be a very solid duopoly with Kalshi and Polymarket leading the US region. Direct comparisons between these two companies are tricky because they attract different audiences and have different business models. Kalshi monetizes better per user, but Polymarket drives higher engagement in niches like crypto and politics. Maybe they're playing a longer term game, but we'll have to see. However, the market is still open and ripe in the Asian region, and there isn't a clear leader yet. Asian markets tend to be very efficient at copying business models, so we can expect to see more pop out from mid-2026 onwards. Personally, I also think that prediction models happen to be the most decentralized models out there, simply because there is just better quality backing and incentives fueling the data, something that most DAOs simply do not have. And I'm willing to bet that in 2026, we're going to see more innovation happen in this sector and a fundraising shift towards products that further service prediction markets. Now, that's it for today's episode of Whitepaper by AthenaX. Once again, we are entertainment finance and not financial advice, and I will see you at the next reading.